Let's get started with the presentation. So welcome to the webinar. Thank you for joining us. This is what is fractional real estate? And my name is Jessica Sun. I am the VP of Marketing, and I have a background in luxury real estate sales. And so today we're going to be talking about what fractional real estate is. And here's the agenda. So what exactly is fractional real estate? How does it work? And then we'll be comparing fractional real estate with crowdfunding and REITs, which are more well-known. And then we'll talk a little bit about who ARC7 is, and then we'll have time for Q&A. So if you do have questions, just pop them to the chat and we'll get to it at the end. All right, so first off, let's backtrack and say, okay, why do we invest in real estate? Well, there's a ton of benefits, including cash flow from the rent, appreciation when the property value goes up. It's pretty low risk compared to stocks, and so people use it as a hedge for inflation. And there's just numerous tax benefits associated with home ownership. But there's a few problems with real estate. First off, buying entire property is a huge expense. I mean, you're looking at a mortgage and an enormous down payment. Some people might say, no, thank you. On top of that, you've got property management. So, even if you have good tenants, you're still dealing with, some turnover in tenants and, the 3 T's, trash, tenants, trash, and toilets. And it's just a lot of work. And you can hire a professional management company, but you're still also then working with that management company. And then the other way to buy real estate that's pretty well known today is through a REIT, and that stands for Real Estate Investment Trust. And the thing with REITs is that you don't really know what you're buying into, because it's essentially a fund that will then buy properties on their own. So you don't really have control over, what you're buying exactly. And so what is the solution? We're going to fractionalize real estate into shares. So very simply put, we take a house or single family, multifamily, just any piece of real estate, and we divvy it up into shares. And then different people can purchase shares of this property depending on how many shares they want. It's kind of like the stock market where you buy stocks of a company. This is shares of a property. And each property, typically in fractional real estate, each property is registered in its own LLC, its own registered series LLC. And so you're literally becoming a shareholder of the LLC, and that LLC owns the property. And so you have direct ownership when you buy shares of the LLC. And so this seems very simple. It's kind of simplified when we put it this way, but there's a lot of work that goes into the entire process of fractionalizing. And so some of this work, before on the consumer side, you see the shares available, there's a lot that needs to happen behind the scenes. And so the first step is actually to say, okay, where do we want to buy these properties? Any fractional real estate platform, they're going to have a team researching and vetting different platforms, different geographical locations, seeing, where the growing markets are, seeing what the economic trends are, and just being aware of, where house prices are appreciating, where maybe the local market is growing, the job market is growing, et cetera. And then there's the step of acquiring the property, and that is its own process. You work with escrow, work with title, lenders, et cetera, appraisers, the whole gamut of people. And then finally, on the back end, there's the property management, which is an ongoing kind of work that takes away the hassle for investors who buy the fractional shares. So all of that is happening before the property is actually offered to investors on a fractional real estate platform. All right, so the benefits of fractional real estate. So let's look at the top 3 first. Real passive income. So this is truly passive. You're going to be making kind of like rent distributions just based on the tenant's rent with no hassle. You don't have to deal with, signing leases and working with them and making sure they pay rent on time. That's handled by the fractional real estate platform. The second thing is customization. You get to pick your properties versus you kind of entrusting a fund to do so on your behalf. Because a fractional real estate platform, you will pick the singular property, the one property that you want to buy shares in, just like you're buying shares of a company. You can buy kind of like a mutual fund or something, or you can just buy, Tesla stock or what have you. And then you have true ownership. And so I put bragging rights and security. So bragging rights in terms of, yes, you do own, part of that property, but there's a security around that because versus a fund, there's kind of a middleman in between you and the property itself. Whereas when you buy shares, you are kind of a shareholder of the LLC. So no matter what happens to the real estate platform, the fractional real estate platform that you bought those shares on, no matter what happens to that platform, you will still have that like claim to the LLC. And then the bottom three here are benefits that may or may not apply to fractional real estate depending on the platform. So at ARC7, we have these, but it depends on the platform you're looking at. So no barriers to entry, zero minimum investment. So, some platforms have like a few thousand minimums. We don't have any. So you can just buy one share, and our share prices vary from $5 to a few hundred. Diversification. So, depending on the platform you use, a lot of the differences are going to be, okay, where are these properties? What kinds of properties are we looking at? What price range are we looking at? We have properties on the East Coast, West Coast. So we've got properties in 6 states right now, and they do range in price. And they're single family, duplex, multifamily. We've got a short-term rental I'll talk a little bit about later. And so really the point of using fractional real estate as a real estate investment tool is for you to diversify your portfolio and, lower your risk and to, earn that passive income from, something more stable than the stock market. And then the third thing here on the bottom right is exit whenever. So different platforms vary in terms of what the exit strategy is. So are you going to hold it? What's the minimum hold period? So right now we are a startup. This is fintech, so it's very much kind of a newer way to invest. So right now we do have a minimum hold period of a year. Some platforms it's several years, and we're actually in the middle of creating a secondary market where you can sell your shares just as easily as stocks. You can sell your stocks. So that's kind of in progress. So that's that. And in general, people hold on to real estate for the long term. It's more of a medium to long term like investing strategy. All right, so let's talk about crowdfunding and how it's different from fractional real estate. So crowdfunding, if you think about Kickstarter or Indiegogo, those are crowdfunding platforms for an idea. And we are talking specifically about crowdfunding for real estate. So it's basically where, multiple investors kind of pool their money together to buy the asset. And so the benefits of this, very similar to fractional real estate, you don't have to deal with the mortgage, no down payment, no hassle. You're just, one investor of numerous. And so, you get to capitalize on those benefits of real estate without those hassles. And so what really are the differences? Well, I actually was looking at like a crowdfunding platform. And so here's like a screenshot from their site. And so, they have a range of different properties, different locations. These are multifamily properties. And so there are some key differences. So if you look at here, there's a $35,000 minimum to invest. And so that already is kind of a barrier to entry to people. And then the target hold period for many of these kinds of deals, crowdfunding deals, are 3 years or more. And so this is because the people running this fund, they expect investors to kind of stay in so that they can keep paying for that specific property. These crowdfunded properties tend to be a bit bigger, tend to be multifamily or commercial. And then another big difference is that, if you notice, they're all offered by different companies. So you're potentially working with, if you're invested in 5 funds, you're potentially, kind of dealing with 5 different organizations or groups. And so it introduces a little bit more risk just for you, because you don't know these people. I mean, you may or may not know, how they work, and they all work a little differently. Every company is a little bit different. And so the burden's kind of on you to just kind of do your research there on who's offering these different opportunities. Crowdfunding platforms, a lot of them, they themselves are just kind of a platform, and they don't themselves offer funds. They invite groups, development groups, or large organizations to put these opportunities on their site. So it's a little bit different there. So in summary, let's look at kind of the benefits. So the first 3, lower risk, diversification, no hassle. Yes, those are all true, because the risk is just lower because you're putting a smaller amount in. It is a way to diversify. It's a way to own real estate. And there isn't any hassle. Cash flow. So most fractional real estate, you are making kind of like dividends or distributions on a monthly basis from the rent. A crowd-funded deal, it's likely, if it's like a multifamily, if it's a rental property, but sometimes you're working with like a development, and that's not going to produce income until it's developed. And so, it depends on the deal. So that's why there's a question mark there. Fees, so it depends on your platform. For fractional real estate, some of them have fees, and then some of them don't. Crowdfunding, they do have fees. They have advisory fees. They have just like deal sourcing fees. Liquidity. So again, for fractional real estate, it just depends. It depends on the platform you use. Crowdfunding, it's much less liquid. I mean, we were looking at target hold periods of 3 years. It could be more than that. No minimums. Fractional real estate depends on the platform. Crowdfunding typically will have like at least a $25,000 minimum. True ownership. So fractional real estate, we talked about that. It is ownership into an LLC. Crowdfunding, it may not be that way. And then singular party fractional real estate, again, you're just dealing with the platform itself, because the platform not only offers the shares to investors, they're also the ones who are identifying these properties and acquiring them, and then also managing them. And then crowdfunding, it's a different organization, per fund. And then earn appreciation, you are kind of gaining appreciation when you invest in fractional real estate. Crowdfunding, I mean, because you're holding on to it for so long, yes, I mean, the value of your ownership goes up. And so it's kind of an indirect like earning of appreciation. It's not like directly correlated. I mean, you might actually see a huge gain, but it passes through whoever's running, that fund, basically. All right, so let's talk about REITs now. And so REITs are very similar to crowdfunding. So this is a little, illustration that kind of simplifies, how it works. So let's start on the left side. So the investors invest into shares of the REIT. So again, REIT is real estate investment trust. And so that is actually a company. So just think of it as a company. They then, acquire properties. They invest in these real estate assets. And then the rental income comes back to the REIT, the company, and then is distributed to the investors. So honestly, it looks very similar to both fractional real estate and crowdfunding, but there are some differences. So first of all, there's different kinds of REITs. And so depending on the kind of REIT, some are more similar. So there's the publicly traded REIT. And so these are actually listed on major stock exchanges. So this is just a list of ones you can just buy on, through your, brokerage. And there's so many different REITs, and you can buy and sell them, just like you would shares. And so each of these are actually funds, and they own, several, multiple properties. And then there's non-traded REITs, which those are very different. They're not as liquid, obviously, because they're not listed, on the stock exchange, and they may have minimums as well. They tend to have minimums, and then the major difference there between crowdfunding and like a private REIT or like a non-traded REIT is that for crowdfunding, you purchase the shares and then they acquire the property. Whereas for a REIT, it's always that they have already acquired properties and then you buy into the REIT, and they may on an ongoing basis purchase more properties. So it's more of, there's multiple properties in a REIT, and whereas crowdfunding, typically just one property. Okay, so just to simplify this, I've just made this kind of comparison chart here. So starting at the top, direct ownership, crowdfunding, you are kind of buying to a fund similar to the way you buy into an LLC. REIT, it's not as direct. You're going through the REIT itself, that company itself, to then purchase like an interest into multiple different properties, and of course direct ownership for buying entire property. It's yours. Diversification. So fractional real estate, like ARC7, we have several different kinds of properties, and you can literally just buy one share in each property. Crowdfunding, you're looking at a pretty high minimum, 25K. I mean, yes, you could invest 100K and buy into 4 funds, but is that diverse? I mean, depends on your definition of diversification. REITs, it's pretty diversified just because every REIT, owns several different properties. And then going down to pre-acquired, we talked about that. So, crowdfunding, they aren't acquiring it beforehand. They're first raising the money to then acquire the property. So you have to kind of go through that acquisition process on the way, whereas fractional real estate, REITs, it's already done. And then of course, buying your own property, you yourself need to do the research, acquire the property, maintain it. Passive income. So crowdfunding, it's a question mark because some projects do have monthly distributions and some don't. So it just depends. But REITs, you are making monthly. Fractional, same thing. Buying an entire property, you do have the monthly income, but it may not be passive. So there's that. And then advisory fees, both crowdfunding and REITs have advisory fees. They charge those fees. And then for minimums, crowdfunding, I guess, there should be a check mark there. So crowdfunding tends to have minimums. I mean, it's possible. I mean, okay, so some REITs actually will call themselves crowdfunded. So they will say that they are crowdfunding. So the definition is kind of, there's no one definition. So if a REIT says it is crowdfunding, REITs don't have minimums, or at least tradable REITs, it's just like shares. You just like stock market, you can purchase one, share of a REIT. So that there isn't really a minimum, whereas the non-traded REITs may have minimums. So there's a question mark there. Okay, so that's that. yeah, if you have questions, again, just pop into the Q&A. It is, there's no clear definitions, but this is like a rough kind of approximation. All right, so let's get to ARC7. Who is ARC7? So we are a startup. We were founded in 2018. Right now, here's like a look at our properties. So we've got different properties in Austin, Berkeley, Seattle, Memphis, Chandler, Philadelphia. And so here's just some of these, the dividend versus the return. The dividend is kind of the monthly, it's like an annualized return, and that's distributed monthly. The total return is just plus appreciation based on historical appreciation, because in a lot of like growing cities, growing markets, you're looking at highly appreciating assets. Just the market itself, strong demand, it's going to lead to appreciation. Okay, and then next, these are two of like our kind of heavy hitters, two properties that really did well. So the first one, Austin, Texas, sold out in 7 minutes, which was pretty amazing. And then the other property is in Philadelphia. And so that one is actually our first short-term rental property. It's listed on Airbnb and other sites. And so it's, we also did a value add. So we just completed a remodel on it, adding a 4th bedroom, adding a laundry room, redoing the kitchen, paint, floors, etc. So really adding some value, bumping up the rents. And that one sold out pretty quickly too. And not all of our properties sell out immediately. So this one, Berkeley, this one is a multifamily unit and share price $28.50. Estimated cash distribution 6.09%. And then here's another one in Austin. We've got 3 properties in Austin, so this one hasn't sold out. Yeah, just some information on that. And yeah, so this is kind of our timeline on how we've progressed. So, every few months we'll acquire property, although that's kind of speeding up. Like the next quarter, we're looking at acquiring multiple properties every month. So you're kind of joining us at the right time. You guys are early adopters, and you guys are going to be seeing a lot of growth pretty soon. So, be excited. And so most recently, we just launched our iOS app. So you can actually download the ARC7 app on the App Store. And, it's exactly the same as what you're experiencing on desktop, but, you can take your portfolio with you and check in on your shares from time to time, and then, browse the marketplace from your phone. And then we also just launched IRA support. So you can invest your retirement funds into these real estate, these properties, which is great because then you can decide, basically you're in charge of your finances, and you can make use of, your retirement funds and do it your way rather than, letting, some other company or, third party kind of take care of that. And some of our milestones, pretty much similar to what we just saw. We did raise over $2 million in seed funding a few years back. And then really the website launched a couple of years ago, and we've just kind of been growing since, and we've been featured in different publications. And yeah, so our goal is to let anyone become a real estate investor in under 5 minutes. And this is kind of the cutting edge, like in terms of fintech investment, real estate investment. Just like you can become an investor in stocks in under 5 minutes, now it's going to be true for real estate. And so this is just some screenshots of the app. You can explore the marketplace, select how many shares you want to buy, and then you just own it and you receive your distributions on a monthly basis. And so up next, so right now, Yeah, we're only open to accredited investors, and you may have kind of seen that as you've kind of gone through our site. This is because of some SEC regulations, and very soon we're actually going to open up to all investors. So we're really working on what's called Regulation A, getting that approved, and this is one of our top priorities. So if you are unaccredited, if you're not accredited, don't worry. We are working on this every single day. And then, of course, we want to feature a greater variety of properties, whether that's more short term, we're looking at, multifamily, commercial, we're looking at different areas. So other, cities, metropolitan areas. And then also our engineering team is working on that secondary market where you can really buy liquid shares and really have that liquidity, be able to sell it when you want to. And so these are all things that we are working on right now. And just a few things that people have said. These are actual investors who I've talked to. One of them says, I'm done with searching for unicorns. I want something simple. I'm transitioning my portfolio to passive income. I've heard, several people say ARC7 is safe. And then, another person, I like that ARC7 is user-friendly and doesn't have a minimum of 25 to 50K. And then finally, I've used other platforms, but prefer ARC7 because it's hands-on. Because, you get to decide which properties you want. And we include like all the details about the property, just like you would see on Zillow. It's all there. It's all transparent. So thank you all for attending the webinar. Let me check for questions here. Oh, and then also, I'm very happy to say that we have a gift for you. So thank you all for attending. Every one of you here is going to receive a share of our Berkeley multifamily property, and you'll see that you'll receive in your portfolio. Now, we can only give these out to people who have verified their accreditation because, again, because of SEC regulations, we still require accreditation, unfortunately. So if you're not accredited, don't worry, there's gonna be more opportunities in the future. But yeah, just know that you guys are all getting a gift. And yeah, so let's look at the questions. Now, yeah, anyone, if you have questions, just put in the chat right now. Okay, so somebody's asking true ownership. So the middleman is an LLC. Yeah, so to be able to purchase a property and you having just, let's just say 100 investors, to be on title, you need to have like at that point an entity on the title, and that entity would be the LLC. Are there any properties available in Canada? So right now we are only open first to US investors, and secondly, we are only acquiring properties in the US. All right, so why is the pace of adding new properties in ARC7 so slow? So I think you'll find that it's going to be picking up pretty quickly. I think compared to other platforms, we are maybe a younger startup, but on top of that, I think it's because we are actually investing in higher value properties. And so, other platforms, they may be looking at maybe 300K, 200K properties in like, North and South Carolina or Tennessee or Tennessee, sometimes, Arkansas, places like that. We're looking at, more established, metropolitan areas in general, like, Berkeley. You're never going to find, a $500,000 property in Berkeley or Seattle. So I think part of it is that, and then we are, a growing company as well. So I think, stick around for the next few months. You'll see us picking up in terms of like acquisition. Yeah, so again, for investors, we're only open to the US because of the SEC regulations. How do you verify accreditation? So there's multiple ways. So it's typically you know, proof of income or kind of proof of net worth. And so you can actually find information about accreditation verification on our FAQ page, like what to submit, for proof of income, the typical like pay stubs, W-2s, that kind of thing. Is the app available on Android? So we only have the iOS right now, but we are going to be coming out with the Android one, I think by the end of the year. It's in the plan for sure. Come to Tampa, booming for Airbnb. Yes, we are looking at Tampa. We're looking at Florida, Tampa, Orlando, Miami. We're looking at it for sure. That's definitely somewhere I think is growing. And then let's see, smart contracts, NFT. So we are not blockchain enabled. It's blockchain real estate. That's like a whole other topic. I would say we could. I don't know if we could do a webinar on that, but that is kind of another bigger topic. So that is also a trend in fintech for sure, but fractional real estate doesn't necessarily interact with blockchain. Okay. All right. Any other questions? Let's see. Okay, do we have any charges, transaction costs? So to buy shares, there's no like commission. So like, that's why we say that we don't have fees. But I did include a slide that answers the question on how ARC7 makes money. So let's see. Okay, here we go. So the way we make money is very simple. So when we acquire the property, a beautiful property, before it is offered, we take a sourcing fee. So that is the only kind of fee. And then there's standard property management. That's always going to be there, that we just need to manage property. Every property needs to be managed somehow. And so that's just the standard management. But yeah, this is it. There's no fees to trade, to buy, to sell, etc. So what's that? In terms of planning to open to foreign investors, that would be amazing. It would be amazing to expand. Right now, I mean, ideally we would be open. Right now we're kind of still working on just opening to non-accredited investors, and there's no like definite plan, but I think ideally, yes, we would be open, but for now it's going to be US investors only. Okay, any other questions? If not, totally good. And again, I know this was a lot of information, so you guys are all going to get the link to this recording later on if you want to review. And if you have any other questions, just email us, support@ARC7. We go through all of those emails. We'll get back to you. And yeah, so thank you again for coming, and thanks for joining us this afternoon. And we'll give you your gifts if you're verified. And thank you again.